It's that rise of the retail investor, Cathie, and very much you have a loyal following of those retail investors. Looking out over the next few years, how important will the rise of the retail investor be, and how on where the market goes from day to day?
Yeah, I'm going to give a shout out to Tom Lee from Fundstrat. He picked up on a study that Stan Salvikson, who was the chief strategist of Merrill Lynch in the 80s, when I was just coming of age in this market. Stan had a hypothesis that the baby boomers would make for 15 to 20 years of a bull market in equities. And that's what happened. It was a very simple assumption, and it played out beautifully. Tom Lee, I don't even think he referenced that study, but has taken the notion that millennials are the reason we're in a bull market for equities, and that this leg of the bull market won't end until 2026. And I think he thinks that the bull market, with some fits and starts after that, could actually extend to 2038, I believe it is, which is the year that the number of millennials peak. So this is the echo of the baby boom. I lived through the baby boom years and that equity market move. It was magnificent. It was a very simple assumption, and it worked. And I do feel we are in the same place now.
And Cathie, too, lastly, before I let you go, given everything you've achieved in financial services, the following you do have, how do you feel when you hear there are people or short sellers betting against your funds?
Well, what I think two things. That's what makes a market. And, we're all going to have different points of view based on our own research. So I like the fact that, markets are being made around this controversy. We want the controversy to be out there. What I found for years is innovation was avoided. And whether it was research or investing, there was less and less of it as our markets moved into more benchmark sensitive territories after the tech and telecom bust and then the 08-09 meltdown. So much so that analysts and portfolio managers felt they were taking a huge risk investing in a stock that was not in an index. Well, guess what? A lot of innovation, which is all about the future, is not captured by indices. In fact, very little of it, we believe, is captured by the indices. And so I felt starting a business on that premise to focus exclusively on disruptive innovation would become productive. And it has, because we have never been in a period ever in history where we've had 5 major innovation platforms involving 14 different technologies, all moving into S curves, the S curves feeding one another. We're in a period of explosive innovation. And so, I think that as more and more investors and analysts do the research that we're doing, and we give our research away. We're happy for anyone.
I'm a subscriber. I've signed up.
There you go. There you go. So thank you very much, Brian. But we feel one of our missions and values is to educate, because we feel like there's been a dearth of education in the financial markets around innovation because of this backwards looking, benchmark sensitive style that evolved out of 2 crashes. So many people ask me, are we in a bubble? We couldn't be further from it. I do not believe that investors, the average investor, shall I say, understands how provocative these next 5 to 15 years are going to be as these S curves feed one another and enter exponential growth trajectories that we have never seen before.
Well, I could talk to you about stocks for the next 5 hours, but we will let you go, Cathie Wood. Start your long Labor Day weekend. We greatly appreciate you giving us some time here at Yahoo Finance. I can tell you there are millions of people right now on our platform that are very excited to have seen you today on this Friday afternoon. Cathie Wood, ARK Invest CEO and CIO. Good to see you. We'll talk to you soon.
Good to see you, Brian. Thank you. Happy Labor Day weekend. Bye.
Thank you.